The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday on market days. 877-927-6648 is the number to call. And thank you, Steve, for 2 great hours. And this is Tuesday. Of course, you've got that wonderful options show coming up straight after my show. And just programs all the way through the day. So let's go through this market. Dow's down 68 at 14,868. S&P is at 1667, down 9 points. The composite index is really taking on the chin now. 46 down, 37.23. Gold is running a little bit. It's up to at 1327. I'll talk about that in a moment. No, I'll talk about it right now. We will see if later on in the week gold becomes a harbinger of fear, where it becomes a currency of fear. At this particular point, until there's about a 28 to 32 point sudden spike up in gold, this is just stuck in a trading band. We'll see what's going on with it as we move along. Maybe we'll get to talk in greater detail. Silver's up 5 cents at 22.45. What have we got? We've got crude oil up 44 cents. But bonds are only down 230 seconds, down 230 seconds instead of being up. There is no flight to safety. Bonds, in fact, just as the dollar is attempting to rally and cannot, because I've been talking about this, I don't know for how many years. Whack-a-mole, just be knocked down, knocked down, knocked down. You should see the dollar rallying much more. No, you won't see it because the Fed is just determined to keep it low. And bonds now, they're determined to keep it up. So I suspect that what we're looking at here is that bonds are being propped up. They should be going down much more. The relationship of money fleeing to bonds is not really there anymore. So I think the bond yields are just going to be stuck in a trading band. Quickly, let me go there, trading band. Wow, look at that volatility index. I'll talk about that in a moment. The volatility index, fortunately, we are still long a little bit of that double VIX index. Now, let me just do this. I wanted to get the chart right here. There it is, the weekly charts. You see, here's the peak D that was made. Now, let me just quickly go through this. In the Chapman wave methodology, what you look for is the most identifiable low bar, and you merely look at that, and then you can get at least, if the waveform is going to succeed in going from a buy signal to a buy mode, you should get at least 4 peaks high, which takes you to peak D, and that's exactly what the bond yields did. So I'll get back to all of this. I want to put it together with a number of different things. So let me go back to the market itself. So you've got the dollar, and I'm showing you the chart of the E-minis, DXY. Just let me finish up with this. There's the dollar, repelled at the 80.10 line, the dollar index, 80.10. It's really struggling. It's at 79.99 right now. I'm a little bit behind, so there's a tiny little bounce off the lows, but it's just stuck. Okay, now let's go through the numbers. In the Chapman wave methodology, what you want to do is you want to look for either divergences that are key at certain peaks or troughs. You want to look for at least peak A to B to C to D. You want to preferably find it in the root, but if it goes to one of the ETFs, then you can use that. You might have to even use that. Let me show you something. Look at the E-minis, ES. It took me just a little while to figure this one out, and then the moment I figured it out, I said, uh-oh, we have got a top. We have got a chart. This is most important in my work. Identifying the tide. Is it going in or is it going out? I need quickly to go to my CD just to show this particular chart. Now, will I ever find it? Will I find it? Will I find it? Yeah, I will find it. It's just somewhere around over here. Somewhere over. Maybe not. I'll get it. There it is. Okay. Remember, I always talk about the tide, and I say, when you're looking at something, look to see whether you're making higher highs and higher lows, or whether you're making lower lows and lower highs, because that essentially is the simplest way to identify a trend. When I do, hopefully coming up in November, when I do my Master Trader series, I'm going to be discussing these things in great deal. I'm going to talk about the simplicity of things. Yes, I can give you all that kind of software stuff, but no, you just need to look for very, 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 very simple things. And in this case, the moving up of the price with the fast moving average of the MACD is really important. On the way down, is it underneath, in this case, the thin line below the thick line? Yes, and there's your trend. Please, please, please try to make things as simple as you can. Look what happened here. You're going up above the 9-period exponential moving average. Now you're going down the moving average. Look at this. I've got, no matter how I count it, if I go to the SPY index, the SPY ETF, I have to call this a peak G. There's a fading stochastic, a fading MACD, these two beautiful indicators right here, these tools. And you're about to test the most critical uptrend line that hasn't been broken since it started back in November. The week of November the 16th was the low at 134.70 on the SPY. The next low, the first identification low that can tell you that you might be able to draw a trend line, is the low of the week of the 4th of January, 2013, the 139.54. Look how uncannily beautiful these trend lines have held the price. 1, 2, 3 times. Here comes the test of the 4th. What is different this time? Look how you're making lower lows and lower highs in the MACD. And lately you're making lower highs and lower lows in the stochastic. That says this is almost, I wouldn't say 100%, but this is almost an 80% chance that you're making a peak G right here. Now, the only reason we got out of the 200% long, the VIX index this morning, was there was a really quick 23% gain over and above the 5 or 6% gain that we had before. So I said to keep some shares, and we'll take off a majority of the shares. Why? Because if there was going to be a bounce from where we were, I wanted to pick it up in this particular index ETF at a lower price. But I did not want to lose the opportunity of being in if it actually continued higher. But in my opening call, that's my very comprehensive market view that I give every single day to my daily newsletter. I show all the parameters. I show how we've gone index by index from sell signal to sell mode. What was the last one that I was looking at? Was the Qs. The Q, remember I spoke about this the other day. I said the Qs have just made a peak E. Peak E top with fading stochastic and fading MACD. That said that there was a real good chance it's going to go almost immediately from a sell signal to a sell mode, which it just did today. Now the Qs are in a sell mode from the 76 high. But there was another technical indicator that I showed my subscribers. And this has been current with the sell signals we've been getting. And that is my 2-bar reversal. So that to me was really important. Now what have we done? We've, in a quicker time than I anticipated, we've gone to a close test of the left side low, and that comes around 77.64 to 77.50s. What's the low today? 77.68. So we have been short the Qs. We're also short. We are long still a partial position of the VIX index. I can't even remember how many shorts we got here. Oh, we were short another index, but this one here, I hope that those folks that were at the talk I gave a few weeks ago to the investors, the Boston Investors Group, as well as the Investors Business Daily Group, where I said I am very cautious here. For the only reason is that in the chap wave methodology, there is such a consistency of peak Ds and Es coming in and giving you tops that especially when the stochastics fail, that I have to stick with what the the overall spectrum and the techniques that I've developed over the last 20 years or so, I have to stay with that. And just because of it, what I'm looking at here is there's another index. And I'm going to show this one. I don't want to, but this is an educational program. There's only one way you can really learn, and that is to be able to look at practical examples. A peak F top in the Chapman wave, especially if accompanied by the double top formation. And the double top formation is really very, very important. Why? Because it says that, let me just go to chapter 22 here, chapter 22. It says that if there's a price that goes just below, just on, or just above the previous high of peak D or E, or maybe an F, and the technicals are failing, that cup formation is lethal if you're long. You have to protect yourself. If it breaks through and holds for 2 out of 3 bars on the upside, that is really strong action. But if it just pops up and then pulls back, you've got to be very careful about that. That's exactly what happened. Pop up, couldn't hold held for 1 day and then broke down. This is the IBB. This is the iShares, the NASDAQ Biotech ETF. Now look at the pattern. The pattern says that if you make that cup formation, if you pull back about a third to a half, there's a real good chance that at some point fairly soon you're going to retest the low of the cup. If you take out the cup formation, you can get a 1-to-1 to the downside. So this particular index right now is stopped dead right on the 50-period exponential moving average. But it's a peak D in the weekly chart. And that peak D up against that resistance that I drew in says, okay, that 9-period exponential moving average, you've only broken it a couple of times in all the periods since you've been up, since January, the week of January the 4th of 2013. If this time you close for 2 consecutive bars under the 9-period exponential moving average, that could be a significant top that would involve what? The monthly chart. You see how I like to go from time frame to time frame to time frame. So here we are. We're looking at a time frame that says the monthly chart is not given a single signal except for 2 very subtle little things that if you were looking for them, you'd say, there is a chance now of a potential hat trick top. What is a hat trick top? Well, in my CD introducing the Chapman wave methodology, let's just type it in here. Find, and I used to use a hyphen, so we'll use the hyphen. Now people don't use a hat trick, just a hat trick. Right there. And there it is, a hat trick right there. It's one of the techniques I like to use, and I'll be back straight after this. Basil Chapman, the Dow is down 61, S&P's down 7, 877-927-6648. Great day for calls.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direxion Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direxion Shares gives you the tools for both sides of the trade. Discover how we can help at DirexionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direxion Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direxion Shares. To obtain a prospectus or summary prospectus, please contact Direxion Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Dow's down 56, S&P's down 7. And this is what I'm looking at. See, in my CD introducing the Chapman methodology, Chapter 7A, Peak F, usually called a serious Peak F. This is where very often you start to get hat trick formations, and let's look at this right now. Peak F would be the 6th highest peak from the lowest low bar, identifiable low bar. Well, if you look at the IBB, it made let me go historically back. Is from the low that was made in 2002 in July at 39.65, it's gone. Peak ABCDE. There's the 200-period exponential moving average. Couldn't get there. Pulls back. Starts a brand new ABCDE. Down arrow. Pulls back. That was the high. Just touched, almost touched the high, the 200-period moving average, that gold line, in February of 2006. Pulls back, and then it goes another single leg down. Very positive. Goes ABCD. Now it goes above, but it can't hold it for more than 3 sessions. In fact, the 3rd session is way under. And it pulls back at peak D, go to 57.14 back on the November of 2008, and then it starts a move that goes peak ABCDE, nicely above the previous high, pulls back. Then it goes ABCD. The MACD and stochastic are still very strong, so that goes to E and F. Now, that's an F/B. My preference right now is to think of it as an F, but I don't have to really do anything other than to mention to you this is where you can get what I call the hat trick top, which says not only do you have 1 month of a decline coming, we don't even have a peak yet, because the month of October made the new higher. Last week was the new all-time high. So you have to wait all the way through November before you can say October was a peak. And then you have to wait probably all the way through December before you can really tell if there's a much lower low below the 183 9-period exponential moving average, and if certain moving averages have moved just in certain directions, you'll be able to say, okay, we've got at least an 8 to 10 week correction coming up here, but we won't know it. So therefore you have to go to the time period before. That leaves you with the weekly. And the weekly says, okay, I'm calling this at least peak D. You see this beautiful, here's another little technique that I developed years ago. You see this dashed line here? Let me just have a look. Am I able to show that? Yeah, you can just see it. Beautiful. Great. You see that dashed line there? Well, that dashed line says there's a semicircle, kind of an ellipse, and it's coming around, and it comes out to where right on this particular line. Now, let me draw this. Normally, this is a little bit sloppy. I usually draw a lot more accurately. I think I did this quickly the other day. So let me put new parallel. This is the one that's green. Why? Because in the IBB, the iShares NASDAQ Biotechnology ETF, if there is a decisive break and at any point it takes out 223, the 222 resistance, it's a moving trend line up. That's a breakout of real significance. However, I can now put in the other trend line. Well, there are two. One is a very obvious one. It's that rising expanding wedge. I usually talk about falling expanding wedges. Let me just draw this in. I'm going to make it nice and thick. I'm going to make it nice and thick. I'm going to make it red. I'm going to double the weight. No, triple the weight there. And because it's so important, I'm going to change the color. Changing the color to a dark maroony color. But I'm also going to do something else. I'm going to take this line right here, and I'm going to turn that into a maroon color. And I'm going to make it thick. And now you're going to see something that's very important. You see that doji at the bottom? You see the way the price kept going to the top? Into the inside track. That's a technique that I teach. It's called the inside track repellent sell zone. You don't always have to you don't have to always sell at that point. You can wait, but that's where the price gets repelled. Well, now look at this. If I'm to draw a parallel line, new parallel, I must change the color to green. I'm taking these all away. I don't like messy charts. I'm just doing this for educational purposes. You see that green line there? Theoretically, between that line, which is at, depends on what date. Today it's 198, tomorrow it's a little higher, it's 199.63. In that zone, you should get support and it should try to rally. This is the weekly chart. So we're looking at this, and I'm saying that at any point between 198 and 196.80, if there's a close in the next 2 weeks below that, that's a big problem for the IBB. I'll be back. Basil Chapman, Tiger Technicians Hour. Very quiet day. I don't know why. I think I know why. I'll talk about it when I get back.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi folks, Basil Chapman. I decided I would pull up the SMHs, the Semiconductor Index, very important index for a number of reasons. And when I played tennis with my good friend who has a semiconductor company the other day, he was shaking his head saying he's not happy with the way things are going. And I learned a while back that I have to do my own homework, that very often the people in the field are looking at something that the charts say is the opposite. This time I said to him, I actually agree with you, but I don't get it. I haven't got a signal yet, but emotionally I do agree with you. And that's the way you got to trade, is wait for the signals. So I'm looking at the SMHs daily. Let me just put this in here. Put it in with an up arrow right there. That's the daily. Let me just type in. Now, the moment I look at this, I straight away say, uh-oh, there's that falling X. That's the lower highs and much lower lows, that increasing wedge formation, but with a downward slope. So it tells me the moment the SMHs take out 40.51, they're going to tackle the left side high of 40.71 with a real good chance of breaking above it. However, I haven't finished the notation in the chap wave, and it says peak A. Remember, we're looking for at least a peak D. So there's peak A, there's peak B, there's peak C, and there's peak D. Well, lo and behold, D is where the song goes. The wave goes to A and then to B, even the anticipated C and D. That's when it flashes a cautionary light. But all you gotta do is make your stops real tight. So there it is. D. That's when you can expect the chance of a greater pullback in time or price. And this is what we're getting. So it tells me that the SMHs, I have to now look at different time frames, because in the daily, the SMHs has gone to a new recovery high to 40.71. Let me type that in. 40.71. Pullback just modestly. Today's the ugliest candle we've seen in quite a long time to the downside. We've had this to the upside. And it says the arch can go to that could form an arch formation. And if it takes out decisively the left side low of 39.37, it's a 39.77 right now. 39.37. There's a good chance it'll fill the gap. What's the gap? The gap is between 39 round number high on the 9th of September and 39.18 low on the 10th. So that's the 39 area would be the target on the downside. Hey, wait a minute. I had another question. First of all, let me do this and I'll finish it up. This is the Semiconductor Weekly. The weekly says there's a much greater chance that we've gone to a doji high at peak G in the weekly, but the stochastics at 86%, the MACD's okay. So I can't really say anything. I have to base it on the date, and day says it's starting to fail, but it hasn't actually failed yet. If you were implementing a short, you'd have to use the previous high as 1 penny above it as some kind of a stop. However, 39.31, see, we had 39.37, now we got 39.31 is really important, and the up channel, the up track, I'm going to make this a little bit more defined like that and like that, has a low of 38.19. Let's call it 38. It breaks 38, it'll break the 68 low of the week of the 30th of June. But wait a minute, we're going to go to the weekly chart, monthly chart. Monthly chart made an all-time high back at in June of 2000 at 100.20. It pulled back a little bit to $12.95. That low was made in 2008 in December, and now it's run up very nicely to let me just open this up. And that has gone to where? Peak ABCD, pulls back, goes to an E. That's the right arm extension of the Chapman wave. Pulls back sharply in one leg down, and this starts a brand new ABCD, and the D is going towards the left side, right side price time match. It's a month late. Last month would have been perfect if it hit the high of 42.53. It didn't. It missed it by how much? 40.71, 1 3/4 points. In how many years? In 9 years, it missed it by 40 cents, 70 cents or something like $1.30. So that has gone to a D. It says right there you got to be careful because the SMHs could be a bit vulnerable. I had an email question that came in about the SDS 120-minute chart. So let's just do that. SDS is 200% short the S&P or the SPY. It's in leg D in the daily. Did I do that? Yes. And leg D in the 120-minute chart from the low bar of 34.62, 11:30 on the 19th of September. It's gone peak ABCD, pulls back, and then squeaks to an E doji high, holding the 9-period moving average. Fast moving average is still holding tight, and then it goes to spike up to F, and that F at 36.95 at 11:30 on the 30th of September sees a big pullback, an A, trough B. It's almost like a lightning rod. A to B equals C to D expansion, and then it goes ABC finally above the 9-period exponential moving average, and now it's trading very nicely above that, and the MACD is climbing and the stochastic is climbing, so the SDS is in leg D. This is the second buy signal to buy mode above the 200-period moving average in the 120-minute chart. Weekly looks like the doji low coincides with the doji. Is that a doji? Yeah, with the doji candle high at peak G, and we've got trough G. Got a beautiful mirror image. This says, be careful, be careful, be careful. Identify the trend, and then stay with the trend. Now let's just talk about the VIX index for a moment. VIX.X. Oh, I said that I thought that I knew why they'd be so quiet today. I would not be surprised if there are so many people that are still not yet short It wouldn't surprise me at all. Listening to the news, listening to some of the interviews, trying to read between the lines of what's going on with all the different analysts. I think a lot of people just missed this. I think a lot of people were looking for a retest of the highs or getting close to the highs. And that was my position right at the very beginning. I thought, gee, SPY at D, that's good. E-minis, S&P up at D, that's good. My Dow diamonds were fading, and the industrials would have to take the previous high from August and keep it going into this particular high. It took me just a little while, and then I said, got it. And that's where we started shorting. And that's the position we're in. Now look at this. This is even more important. You've got a left side, right side price time match in the daily that says that the high of 2191 should come in by the 18th of October. But we're going straight to bump into the dash line. I call it the inside Chapman wave inside wedge target line. And that target line, that dashed line, says there's enough repellent energy at 20.15 to say that just maybe there's a little bit of a boost to the market before then. But to tell you the truth, when the momentum in the volatility index kicks in, just look at this. When the momentum of the volatility index kicks in, look at that left side, right side price time. What a wonderful technique. It took me so long to develop some of these techniques, and yet they have proven themselves over and over and over again. Left side, right side price time match in the XIV, which is trading at 22.99, down 97 cents. Going to leg D, my target was 23, and the low today is 22.96. So 22.96 has gone underneath it in leg D, but the inverse of the VIX index says that this particular index is saying 21.91, the high of the 24th of June. This is a daily chart. And that 18th high, if it's met earlier, that's very, very bullish. That's bearish, of course, for the market. I think we're getting close to some kind of news thing. I just want to show this. This is the very long-term 23.23 back in December the 28th of last year, where it went to 23.23. Well, there is a left side, right side price time match. The longest one I've got says that it should get to 23.23 by December the 13th. That's going to change. I'm going to use a different midpoint. This is what I call the plumb line. Sometimes the plumb line is just perfect. Look at this one. Plumb line was within 1 day of being perfect right here on the XIV, the inverted VIX index. Look, 1 bar, well, maybe 2, sorry, 2 bars from the high. Oh, no, it's perfect. Right there, right there. Let me just double check. Ah, perfect. Unbelievable. Look at that. To the high, to the low. Yep, that's it. To the day. To the exact day. Left side, right side, price, time it. I love this technique. And it's forming a large cup formation, which is made up of 2 cups, inverted arches. I shouldn't say cups. A large arch made up of 2 little arches. And that says to me that we could go underneath it. We could be close to some kind of an announcement, some kind of a... let me tell you something, folks. I've been around long enough to know that when the politicians start to do this stuff, it's like, you remember nudge? Remember what I was talking about yesterday when I spoke about nudge? There was a question about the debt ceiling. What, is this pre-planned and all that? And what I said is that very often the concept of what would happen is known earlier, and there's a plan. Some people have a plan, some people don't. But the actual momentum going in is what I call the nudge factor. That if all of a sudden the momentum, it can be very quick, suddenly builds up on options expiration day, and instead of going up, the market suddenly goes down. That nudge factor, that little wink. Remember when I said, when I used to conduct groups, when you just move your hands a little quicker, 1, 2, 1, 2, 1, 2, 1, 2. That means you've accelerated. You don't have to talk. There's no 7-page or 1,200-page book that says when you get to such and such page, asterisk, addendum. Yeah, go a little faster. It's just an instant a look of the eye or a movement of the hand. That's the nudge factor. That's what we got today. It looked like there was going to be a rally. The nudge factor said, oh, it's weakening. Let's grab and this is the day. Now you got to start being very careful, because once the nudge factor comes in, it can stop dead on a dime, or it can accelerate. You just don't know. You actually have to be in the trade to know what's going on. It's very hard to suddenly grab the trade here. So let's do a couple of things. I've spoken about the volatility index going to 2191 at some point. The high today is 20.24. At the same time, the XIV, the inverted VIX index, this one, the VIX shows buying pressure at the moment, and the XIV showing selling pressure. Buying pressure of the VIX, that is, and selling pressure. That is telling me that if there's a break underneath us, we don't really have support in the XIV until it gets to 20.02. That's over 2.5 points from here. That's the reason why I wanted to identify the trend, stay with the trend as long as we can. But at the same time, when you got a quick 23% profit, I think it's incumbent upon you to take some of that 23 profit. Now it's probably about 38% for the remaining shares that we have. What can you say? That's the way it is. But now I just want to read something that I said in the den. One of the dentists said he sold a particular issue because it made money and he's raised the stop on the rest. I said, we are probably going to appreciate that when the trend has been identified as having changed, it is best to add, not to subtract from short positions. That modus operandi would have been even better for my subscribers than being too cautious. I got a little bit too cautious the other day. I added and we got stopped out for a tiny loss, but that add, I should have said, I'm staying with that position to the one that we already have instead of taking a tiny loss, because it would have doubled the expectations that we're seeing right now. With wrong thinking. So that the thinking has to change. You have to adapt to the conditions and then ride the trend. It's very hard to implement that philosophy, especially when people have been so bullish for so long. To suddenly become bearish, it's almost embarrassing. I had a very interesting experience the other evening. We were at a friend's house. Wasn't a party or anything, but she just got a whole bunch of friends over, and we're all there. So this one friend of mine, I've never spoken stock market with her. With her husband, once or twice, but not with her, ever. It didn't even come up. We were sitting there. It turns out that the men were at the men's section and the women at the women's section. For some reason, with the seating, I was sitting there with the women, and conversations are actually quite different very often. And I'm sitting there, and out of the blue, she turns around. On the other side of the table with the men, there was this whole discussion about the Obamacare and a number of physicians there, and they were actually all for Obamacare. And there was one person who was talking about the costs and all that, and they, like a group, they jumped at him. Very interestingly, this person next to me suddenly heard the conversation over there, and she turned around and she said, looked at me because she knows what I do, and she said, I sold all my stocks on Friday. Today. That was Friday. Did she say today? Yes. No, she said today, Friday. I said, fantastic. How come? She said, I don't have to be embroiled in all this stuff. It just made sense. Wasn't that perceptive?
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position subscribers sold recently for a 42% on part, plus a 64% on rest at Hertz Global as a core position for 6 months before exiting the position. A current position entered as a turnaround company with good technicals based on Basil's waveform is trading up to 170% of its entry point as a portion sold earlier for a 21% gain. Subscribers to the Opening Call can see the Chapman Wave techniques demonstrated and explained daily to educate investors. To get your 2-week free trial to the Opening Call, just visit the front page of TFNN.com. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday at 11 a.m. Eastern on TFNN.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Just got an email. Hi, Basil. Could not call today. Thinking of buying futures. January 120 crude oil calls. January, huh? Thoughts. All right, I've got the December. Oh, no. I'm really not so impressed with the crude oil. Which I'm. In fact, in this market environment, I don't actually see why crude oil should go up. I would not be buying crude oil at all at this particular point. In fact, I'd probably be, I'm not going to say to do it because I don't know. I need to see what happens at the end of the day. I'd probably be on the short side of crude oil, but the natural gas is different. I told you before, I like natural gas. I think it's starting to make some kind of inroad into a longer term in terms of, if you look at the continuous contract, it did not make lows. It's got an H pattern that could actually turn out to be really positive. So I much prefer, if you're going to be choosing one of those commodities, I'd be looking preferably at. I said it before. I think natural gas is the way to go. And why it's a catch-up situation, crude oil is not. So just to clarify that. Okay, folks, let's just do this. We're about to wrap up. I'll probably be doing my shows remotely in the next few days. So just in case, let's just do this. I'm looking at the Dow. I always love to use the Dow. Remember, I already said, how can you rely on the Dow? How can you rely on the Dow? I said, where the Dow goes, most of the other indexes will go. It might be a little later or a little earlier, but that's just my impression. That double top formation that we're looking at in the weekly chart says we've broken a third to a half of the cup formation from the 15,658 high to the 1476 low. Went up to 15,709. I have to call that peak E. That's a double top formation. Remember, we just looked at the double top formation. It's actually a double U, two cup formation. That sometimes says, I tried the second time and couldn't do it. So if I take out 1470, this is the Dow talking. If I take out 14,760, it could be a real quick trip to the 14,451 area. I've broken. The week is not finished, but on the week so far, 1.5 days into the week, I've broken one of the most important trend line support levels. Stochastic is pointing down, the MACD is pointing down. The tide has changed. It just says it as simply as that. The tide has changed. And because of it, it makes the resistance at 14,990 to 15,020 as the first real strong resistance, with an 9-period moving average of 15,128 at this particular point the next. I believe we're going to be making a peak D in October in the weekly and the monthly chart. And as such, you've just got to be real careful. I haven't got the sign yet. I'm just saying I believe we will. I don't see what's going to take the market up to the 15,710 level to start leg E at this particular time. I think there's a certain a barrier being set up between the two parties. That's just the trigger. I've been talking about this for ages. I said until we get a story to go with the higher VIX, the VIX won't stay higher. And now we've got the story. You've got the story, and it says uncertainty. Uncertainty ahead, uncertainty for the foreseeable future. That's the next couple of days or week or so. So now you've got the headlines. That's what you needed. I will never fight headlines that goes together with the VIX index. So I'm saying to you, be careful. 14,715 is the level. Now, for my subscribers, what I'd said is 14,760 is a left side, right side price match, which goes to today. I couldn't believe it. Look, there it is. 14,000 to the 10th. I even typed it in. On the 8th of October is a left side, right side price match for the 14th bar, matching the decline from August of this year. So the day is young, but the MACD is expanding. Stochastic's flat. I can't even see what the stochastic is. It's very low. And all I can say is just be real careful. Be very careful with your long positions. There are some stocks that still look like they're kind of good. But the weight of evidence says the majority of stocks are going to be going down. Thanks for being here. And what's today? Tuesday? Yep, I'll be back tomorrow. I'll do my best. I'll be back tomorrow. And have a wonderful day. Stay tuned for the Options Hour. Great show coming up.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.